Good morning, folks. It's Harry Swaminathan. It's June 28th, 6:43 a.m. And what we're going to do here, the futures are slightly up. So let's take a look at some of our positions. The first one is, well, actually, I wanted to cover gold first because gold has been really crashing. And you can see that our position has a profit of almost $9,000. So we put the gold straddle when gold was around 135, and today it's at 116. So you can see how well the straddle has done. And this is, of course, in the August series, so we still have about 48 or 50 days left on this trade. But this is where we stand with gold. Gold is at 116, and our profits on this trade is huge. Let's go take a look at the gold trade, and you can see on the straddle, we have 49 days left. The calls have become almost worthless, so we can just keep them on in case gold comes back. But what we can also do, you can see the 135 put, we put it at a price of 5.85, the trade price, and today it's at 19.35. So if you look at the graph, we are right here. So basically, it's we've made the straddle work for us. Gold has been crashing, so it's been great. Now, what do we need to do? We got to protect this $9,000 profit that we have. And the way I'm thinking, and there's not an easy way to protect all of it, but at least we can try to protect some of it. So let's see. Let's go take a look at the August series, and this is where we have our positions. So if we our 119 put, our 135 put is worth a lot of money. It's worth about $19 right now. So the way I'm thinking is, let's say if we sold, and we've got a profit of $9,000, right? So let's say if we sold the 116 put. So let's just put this and analyze what we need to, what we can do. So if we sold the 116 put, basically we are capping our max profit at this point because we would be selling this put. But do we want to cap it right here? I don't think that's a good idea. Let's try to see if we can give it some kind of a gap, like 114 put, we'll get about $4,000, and we will be capping it at a much higher point. So if they do expire somewhere here, then we would make 14,000. We still have a negative delta of 410, and now we can at least protect this for this $4.10. Perhaps we can take 5 contracts off, so that way at least we can protect $4,500. That may not be a bad idea. I think that's a better move rather than trying to limit it by this. At this point, what we can do is take off 5 of these long puts, from the 10. That will still leave us with a negative 400 delta, quite a decent amount to continue. So basically, the best approach is to take 5 off on this contract. So that's what I'll be doing today. On the put side, we'll leave the calls. The calls are anyway 28 cents or something, and we'll see what happens with the calls. But let's leave the calls there. So CMG, I think finally, after all this mayhem, we are at the even line. So we're going to let this go there. This is in the September, so we've got a lot of time for CMG. I think it's going to come back. It just went down with the rest of the market. On EEM, we not doubled down, added 10 contracts, which was a very good move. So now we are approaching. We are still down on this one, but here it's a December contract, so we have a lot of days. So we definitely wait to see how that progresses. On Google, we have a nice iron condor. I think when we put on the call side, so now it is right in the middle. Of course, it's slightly closer to here, but this is in the July series, so we're going to actively manage this trade. I think we've done this kind of a trade a month or two ago, And this time, again, I think Google is going to be the trade to manage. Now, it's showing a P&L of 9801, but we've pocketed almost, I would say, about $6,000 to $7,000 on this trade. So right now, it's a matter of managing this iron condor, and we'll do that. We have a slightly negative delta, but it's, considering it's Google, that's a fairly delta neutral position. So let's continue to do that. And then Netflix also, we had a profit. We didn't take it because, we thought we'll get more, but then the rest of the market took it down. So now it's approaching the flat line again. We do have time. This is again in the August series. And so we'll continue to do that. Price line is also something that we've booked a lot of profit on. And so right now the goal is just to let this expire, and that'll probably give us about a $500 profit or $1,000 profit on price line. Now what I'm looking at is looking bullish is Tesla. So if you come and look at the Tesla, this is if you come and look at the Tesla charts, Tesla is looking bullish, and I think it's going, yeah, you can see that it's piercing through. Obviously now it's a little over the Bollinger Band, so it's a little too late to catch it right now. We would wait for a slight pullback before we take that in. The other chart I like is IBM because it's at the other end of the thing. You can see that it's slowly making this turnaround. So I actually like IBM for a bull call spread. And what I'll do is I will analyze that trade and send out an email later. All right, that's it, folks. We'll speak to you soon. Have a great day. Bye-bye.